Good, good day, students. And today we're gonna be focusing on the part of fixed assets. This is the question I took from Eastern Cape paper for June examination, paper one. So we're going to calculate the profit or loss of the trade-in on the old vehicle. When we talk about trade-in, now we're gonna go and compile a assets disposal for trade-in. So let's look for the adjustment information. Here, number B, it said the following transaction was not recorded. They say an old vehicle with a cost price of 270 was traded in on 28 February 2023 for a newer model cost 616,500, right? So now we're going to 1.1 assets disposal for what? For a vehicle. So here we have cost price. How much was the cost price? 270,000. 1, 2, 3. 270,000. Here we know we have accumulated depreciation. Here we have a trade in. Okay, now we're going to find what is accumulated depreciation amount and trade in. And they say what? The accumulated depreciation on the trade in was 111,240. Now we have the accumulated depreciation 1, 2, 40. Let's read going further. The trade in for the old vehicle was 105,000. Now we have 105,000. So let's close this. Which side is bigger? This one is bigger, you can see it. 270,000. 270. Sorry. 270,000. So we have balancing figure. Here is what is profit, because if balancing figure is this side, it's loss. So here we have profit. How much is profit? 270,000 minus, and also minus this one. You're going to get 53,270. This is your profit. This is what was wanted. Let's go to 1.1.2. Calculate the total depreciation for the year, for the whole year. So we have vehicle, we also have equipment. Depreciation on vehicles calculated 20%. Let's start with equipment, because on depreciation they say depreciation of equipment brought into account, right? So how do we calculate it? There's no percentage. That's the trick there. But let's come here to our table. They gave us accumulated depreciation on equipment, balance at beginning, and also balance at end. So we all know that when we are calculating balance at end of accumulated depreciation, we say balance at the beginning plus depreciation equals to accumulated depreciation at end. So we have beginning and we also have an end, which means we're looking for this depreciation. So this is how we're gonna work. We are going to take balance at the end, this one, and minus this one. Minus 800, 900. How much is the depreciation? Our depreciation is 122, 360 for equipment. So let's go to vehicle. So if you look at this transaction, we won't include this transaction. Why? Because our period is ending on 28 February 2023, and this was traded in on the 28 February 2023. I'm sorry, here, which means this was traded at the end of our financial period. We won't include this whole to calculate depreciation because it's at the end. But if it was in the middle of the year or maybe 1 February, we will have included it. So we're using what? Diminishing balance method. Diminishing balance method says what? Vehicle at the beginning minus accumulated depreciation at the beginning times 20%. Let's work it. The cost is 1,350 minus accumulated depreciation. These are 5 equals 2, or let's times 20%. 20% is 20 out of 100, and you get, let's calculate, 99,000. You have all the depreciation. You have this one, and you also have this one, and you are done with 1.1.1 and 1.1.2. I hope you enjoyed this lesson. Have a nice day.